In this video, we'll be going over the line 55 worksheet for IRS Form 5329, which is the tax form that helps people calculate any excess tax they may incur for things like excess distributions or early distribution penalties, excess contributions, things of that nature. So this worksheet specifically deals with Part 9, which is the accumulation of excess earnings in your retirement account. So before a couple years ago, when the tax law was updated to lower the excess accumulation penalty, it used to be 50% of whatever your required minimum distribution was supposed to be. So let's imagine that you have an IRA and your required minimum distribution for a tax year was $100,000. You didn't take it out, then the IRS would assess a 50% penalty on the amount that should have come out of your account. So what they did was they corrected this, and instead of a 50% penalty, it's now a 10% or a 25% additional tax. And there are a couple of things that will impact whether you calculate your tax at 10% or 25%. So in this video, we'll cover both scenarios and then we'll walk through the calculation step by step. So at the very top, the question is, did you receive a distribution of the full amount of the excess accumulation from at least one qualified plan during the correction window? So the correction window from the form instructions is the period of time beginning on the date which the additional tax is imposed on the shortfall, and it ends on the earliest of one of three dates. The date of the IRS mailing you a deficiency notice, the date that the tax is actually assessed, or the last day of the second taxable year that begins after the end of the taxable year in which the tax is imposed. So basically, if you were doing this for the tax year ending 2023, the correction window, that third criteria would be the last day of the second year after that. So not the last day of 2024, but the last day of 2025. So now if you get an assessment or a deficiency notice before then you go by the earliest of those three dates. So the reduced tax rate is allowed if you receive a distribution of that amount that resulted in the accumulation, the excess accumulation within the correction period. So by the earliest of one of those three dates, and you submit a return reflecting this additional tax. So you can submit IRS Form 5329 by itself to do that. So basically, in this scenario, you kind of have to know whether or not you meet the criteria for the 10% tax or whether you don't. And so if this is something that you catch right after you file your tax return, most likely you're going to be subject to the 10% tax. If you're getting IRS correspondence, or if this is several years down the line, then you're probably going to be subject to the 25% tax. So if you notice a mistake on your own, go ahead and fix it. You can send this form, let the IRS know that you had a mistake and that you corrected it during that time frame. In this scenario, we're going to go through this part. There are two parts. Part one, we calculate the 10% tax. Part two, we calculate the 25% tax. So let's imagine that our hero, John Doe, has an RMD, a required minimum distribution of $20,000 from his IRA, and he also has a $20,000 distribution from his 401k. So the Roth IRA, he made the distribution of the full amount within the correction window, and for the other one, he did not. So we're going to calculate these each way. So in line 2, which is where you go to if you meet the criteria, we're going to enter the portion of line 52 for which you answered yes. So line 52 is the amount of your RMD for that tax year. The line 53 on this next line is the amount that you actually withdrew on time. So during that tax year. So in John Doe's case, he had $5,000 that he should have withdrawn that he did not. And so he multiplies that by 10%. He calculates a $500 penalty. Now, if this were the only penalty, then he could just skip all of the rest of this, put the $500 on line 8 of his form Schedule 2. You could put that on line 55 of his form 5329. Or if this were an estate or a trust, it would go on Schedule G, line 8. But since he has his 401k, we're going to do the exact same calculation at the 25% rate. So in this case, he had the $20,000 required minimum distribution. He only took out $15,000, meaning that he has to pay a penalty on that remaining $5,000. So when you calculate the $5,000 by 25%, you arrive at $1,250. You then add whatever's in this line 5 to the $1,250, and that gives you $1,750. This is the amount that you would report on either on line 55 and then on either Schedule 2 of your Form 1040 or Schedule G of your Form 1041, both schedules on line 8. So we'll put links in the show notes. We just updated our article on IRS Form 5329 for the current tax year. So we'll put links to that as well as any of the other related forms and schedules mentioned in this video. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's another topic that you'd like to see discussed in an upcoming video, please hit me up in the comment section. Thank you very much and have a great day.